thank you for calling the hearing and to talk about monetary policy and fiscal policy, both of which impact our economy. And the economy, I think, is the issue that's on the forefront of the minds of the American people. And I want to thank you, Mr. Chairman, for making time to be with us today to talk about your views on that. I'm sure this has probably been asked in some form today, but I wanted to get at this, the level of exposure that the U.S. banking system has to Eurozone banks. My understanding is that overall exposure has come down. I'm concerned that there is significant derivatives exposure that remains, and if the situation of the Eurozone were to deteriorate, we could see a crisis on a par with what we saw in 2008 and 2009 in this country. I'm wondering if the Federal Reserve keeps records of total exposure that our U.S. banks have to the European banking system.
Well, we do. We as supervisors, we ask banks to provide the information to help us analyze their exposures. They are, particularly directly to the sovereign debts of the weaker countries, they are much reduced. The banks still are exposed, of course, to the European counterparts, but they've also reduced that exposure and hedged it to some extent. I would like to point out that we also look at the quality of the hedges. You know, credit default swap is no better than the bank or the counterparty who wrote it, and so we've been looking at that as well. So we think banks have made progress in protecting themselves against problems in European sovereign or bank debt. But I guess I would agree with your final observation, which is that if there's a very substantial crisis or similar problem in Europe, that because there's so many channels in which that would flow through the financial system, I think our banks would still be, and our whole financial system would still be significantly affected.
But you do have a way of calculating or quantifying that exposure, and you're confident that that risk is being reduced by banks in this country to a level that I guess you'd say is sufficient, but I'm not sure.
Well, it's being reduced. It's, of course, difficult to ask banks to completely eliminate their exposure to a major part of the world economy, which is Europe. But yes, there has been progress made both by banks and by money market mutual funds in reducing exposures and improving hedging. But again, I don't want this to be interpreted as a complacent statement. I think that if there were a major problem in Europe, the risk aversion, the volatility, the uncertainty, all those things would have a powerful impact on our financial system.
Do you think that just sort of broadly speaking, is the United States currently in a fiscal position to withstand another economic crisis?
Well, ironically, that's an interesting question. So ironically, U.S. dollar strengthened and U.S. interest rates went down during the worst parts of the crisis because the U.S. is viewed as a safe haven, and that's where a lot of investors want to go, when the rest of the world is uncertain. So in that respect, that actually helps us. On the other hand, if we were to have a significant further downturn in the economy that brought down tax revenues and greatly increased deficits, that would certainly put stress on an already stressed situation.
And with regard to that, one of the responsibilities of the Federal Reserve Board is to have regular contact with the President's Council of Economic Advisors and other key economic officials. As chairman, you also meet from time to time with the President. In those discussions, in your contact with the President and his advisors, have you underscored the necessity of entitlement reform in order to get the country back on a sustainable fiscal path?
I've talked. I think that issue is well recognized, and I've certainly talked about it. Yes.
Okay. One of the concerns that many of us have had is that there hasn't been, in the President's budget submissions at least, and we're going to get another one here this next week, any real focus on those issues, and a willingness to confront what we think are very serious fiscal challenges with regard to these unsustainable costs driven primarily by the sort of the big three, if you will, Medicare, Medicaid, and Social Security. I assume that you agree entitlement reform can't wait. That's something that we need to be focused on?
I think inevitably that's going to be part of broad fiscal reform. It doesn't mean that the system has to change tomorrow, because after all, people who are already receiving those benefits, deserve, not to be shocked by radical changes in their benefits, and I think most people would agree with that. But one could take action now to propose longer-term changes. And I think it's interesting that the commission that looked at Social Security in the early 80s and proposed a phase-in of the retirement age, that phase-in is still going on today,
right,
30 years later. So doing things well in advance actually makes it politically and economically much easier to adjust to.
Okay. See, my time has expired. Thank you, Mr. Chairman.